Welcome to Bears in Exile. It is time for the market overview, and we're going to try squeezing in more than usual since we have to backtrack a little since the video was rejected by YouTube after it was uploaded last night. And as usual, we'll be looking at the same stuff we do every night, so I won't go through the list. Starting off with the Dow. Huge move down. We did talk last night about this candle, but because of the video, we did get further separation. We have entered the bar with the candle. We're still waiting to see if we get complete separation of the short-term moving averages prior to entering the bar. It is a possibility, but we are almost right at it, so kind of iffy. We have had a strong move, and 4 red candles in a row on the Dow. Is it time for a pause? Well, who knows? Tomorrow is jobless claims. Friday is GDP, and they're going to be voting in the House about Boehner's bill, so that will probably be passed, but I would assume that action in the Senate, whether they're going to say they're going to kill it or not, will affect the market. Beyond that, we do have continuation candle. We are way low on CCI. We're going almost to the 20 on the stochastic. RSI is coming in on the 30. We do barely have the bearish cross on the MACD. So if it wants to continue all the way down, these of course can stay at low levels for an extended period of time. So very, very interesting. At some point it'll need to pause, and if tomorrow is the day, then so be it. And if it wants to keep going, so be it too. On the 60-minute chart, we only have one divergence. That is on the CCI, slanting up, not going along with price. But you'll notice that we do not have that on the stochastic, the RSI, or the MACD. Those all look healthy. So if we were going to have some sort of a reversal really soon, I would have imagined that we would already have that on these 3, which we do not. So I don't really have much in the way of red flags that it's time for this to turn around. You'll notice that we barely have excessive separation on the 60-minute short-term moving average, and we don't have much in the way of wobble. We have a little bit, but nothing drastic. So this looks really healthy for a down move. Certainly if it wants to continue on its way, we have can get complete separation after the first moving average enters the bar. And so it certainly could emerge on the other side if it wants to. We are butting into the lower Bollinger Band. But you will notice that we have ways to go to the upper price consensus area. We have broken today the previous low price consensus right here. So that is major. And shouldn't be too much to catch this. We had the major price consensus level of the month before that way back here, and it was broken today. So down here at 12,200 is the lower price consensus from 2 months ago. Whether or not there's any resistance or support there is unknown at this time, but this certainly looks 12,200. Another 100 points to go before we really have a test, assuming that news stays bearish. Quick look at the SPX. Also a fantastic down move. You'll notice that we have a lower close of the real body as opposed to back here. Still have this tail to deal with, but this is very damaging. We have more room between it and the lower Bollinger Band. We have the upper price consensus area right above 1290. CCI not past the 100. Stochastic a ways to go to the 200. RSI closing in on the 3. We have the bearish cross. We have the lower tick on the histogram into negative territory. This is ugly. As long as sentiment holds, as long as we don't have an NDE that is contrary to the bearish state of mind. The VIX, aha. Here is the question mark of, do we slow down now? Do we pause now? We are above the upper Bollinger Band by a really good tick. So, does that mean it's going to push it up? Does that mean it's going to go to the right and move slightly up, slightly down to be outside of the upper Bollinger Band? We do not know. You see this impulsive move on the short-term moving averages. It is not overtly bubbly yet. As it gets more separation, it certainly could be. We are developing a bullish bar. It already has almost full separation. It is still weak, it is still early, but it is there. CCI very high, stochastic very high, RSI getting above the 70, and MACD all kinds of room to move. MACD histogram ticking up. We do have divergence on the 60-minute. CCI, higher peak, lower peak. Stochastic, higher peak, lower peak. RSI, higher peak, lower peak. MACD histogram, higher peak, lower peak. So has the VIX gone too far, too fast? Certainly could be. We do see wobble, we do see excessive expansion, partially on the 60-minute. So, pause definitely possible. XOI. When oil is bullish, the market is bullish. Look at that big old red candle. We have partial crossover, not too much yet. It is at the flatline bar, it providing a little bit of support. You see that we have a little bit of a tail. Still have ways to go to the price consensus area. And we do have divergence on the daily on the CCI. We do have it on the stochastic ever so slightly. And on the RSI and on the MACD, all slanting down. So these are working themselves out as they are all still pointing down, but just wanted to point that out. This does look completely healthy because price is starting to confirm these. That's wonderful. On to TNA. Aha! Look at that. Big old red bar. Broke through upper price consensus. It is way lower than the lower Bollinger Band. We are breaking through the long-term bar, which is a flat line, and everything is pointing down, just like SPX and the Dow. On the 60-minute, you can see that it is doing exactly what it should be doing. We don't have any divergence. It is all slanting down just nice. Perfect. UUP. Look at that. Nice big green candle. We have an uptick. Uptick gives us a target right about 21.25, and everything is starting to tick up except for the MACD. The histogram is ticking up as well. And FXE, does it confirm? Yes, it does. We have a downtick. It is just a hair away. Everything's starting to tick down. This is also a bearish looking thing. If we have correlation again, which that is debatable, since the dollar has been going down and the market has been going down, and the euro has been going up and the market has been going down. So are we going to reestablish the inverse correlation that we had before? Who knows? But the news will decide. GLD finally had its first little down move, and it doesn't look bad. We do not have a downtick, so we don't have a target yet. Everything kind of just flopping around, deciding what to do. You know, down, down, histogram down, MACD neutral, CCI essentially neutral but high. SLV, bearish engulfing, and everything turning down except for the MACD itself, which it may do that very soon. And that's it. I am awaiting Boner's plan, if it's going to pass, if it's going to be announced that it's going to be killed immediately. The jobless reports tomorrow and GDP on Friday. So good luck to everybody. And as always, all investing decisions are your own. This chart and video are for entertainment, educational, and consumption of time purposes only. Thank you very much.